Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Scarlet Fu, we're counting you down to the closing bell. And here to help take us beyond the bell, it's our global simulcast with Carol Massar, who's leaning to the side, and Tim Stenovec, who's still straight up. We welcome our audiences across Bloomberg Television, radio, as well as on YouTube, and Quick Take to parse the most crucial moments of the day. Carol, what was most crucial to you?
Well, I don't know. I feel like there's no direction. I mean, I feel like we're bouncing all around the place. And what's interesting is I was looking at the home builders in particular today. They're down almost 2% in today's session, although they've bounced off in a big way since mid-October. We got some housing starts data that was lower, so some concerns about that. But I just feel like, you dig deeper, Romaine, and you constantly see contradictions of the supply is still tight, so the fundamentals are out there for this market to still do well, but then if you get a recession, it won't do so well. So I just feel like there's a lot of contradictory signals.
That's kind of exactly what Charlie Massimo, the Senior Vice President and Financial Advisor at Wealth Enhancement Group, just told us on our program. He said he thinks the Fed is confusing the heck out of everyone. That's his quote. Okay. He says, I think there's a lack of conviction on where we want to go. And I asked him why, volume is so low. I mean, we're down 20% right now on the S&P 500. Yeah. And he said everybody's just waiting for kind of that next economic data point because we are getting mixed messages.
Well, I think it's interesting. I mean, you talked about how all these mixed signals. We heard from Neil Kashkari a little bit earlier, Scarlett, who talked about this. I think his exact quote was that the U.S. economy is sending wildly mixed signals. And when you look at housing starts, when you look at the Philadelphia Fed outlook that we got, as well as initial jobless claims, that was definitely mixed when you add them all together.
In other words, time. We all need time to see how the data shakes out because you can't draw any conclusions from 1 month of encouraging CPI data. Because look at what happened back in July. There was a head fake when it came to inflation.
Absolutely here. And now you have markets trying to sort it all out as we get the closing bells here on this Thursday afternoon. The Dow Jones Industrial Average that has spent a good portion of the day in the red. We're waiting for these numbers to settle, but basically it's going to be unchanged on the day. Right now, the numbers say it's down about 6 points, so that's basically less than 0.1%. But again, we're going to wait for these numbers to settle. The S&P 500 definitely going to finish lower, but by only 0.3%. Similar story for the NASDAQ Composite, down about 0.3%. And the Russell 2000, which was down more than 1% on the day, trying to claw back, but still going to finish lower, Carol, by about 0.8%.
Yeah, the S&P 500 digging deeper. Most names in the index were lower today, 333 to be exact, 168 higher, 2 unchanged. But what I will point out, Scarlett, is we actually did see some buying into the close, which I thought was pretty interesting. Here we are on this Thursday when we saw so much bouncing around that there actually were some buyers coming in.
Yeah, absolutely. I look at the 24 industry groups in the S&P 500. At one point, there were only 3 groups that were higher, but now you have 7 groups that are higher. So all along, we've seen the tech hardware space doing well because of Cisco coming out with a better forecast than expected for this quarter. And telecoms getting a lift thanks to T-Mobile. But utilities have been in the red all day. They continue to finish in the red, down 1.8%.
All right, let's get to some of those gainers. Scarlett mentioned it. We've been talking about it. Cisco, top in the NASDAQ 100 and the S&P 500. Earnings last night, biggest maker of machines, that run computer networks and the internet. So they are, feeling pretty upbeat in terms of their results. They gave a bullish revenue forecast, helped by corporate and government spending on tech, said demand did not fall off a cliff. So this stock was up almost 5% in today's session. Bath & Body Works, top in the S&P 500, up almost 25% in today's session, boosting its full-year profit forecast due to a focus on innovation and cost control. Analysts found the results to be impressive overall, and investors certainly piled into this one in a big way. And do want to mention, I know I talked about those Chinese ADRs earlier. Well, Alibaba, one of the standouts on top of the NASDAQ 100, up about 8%, soaring amid profit beats, and also talked about stock buybacks. So we're talking about $15 billion, maybe announcing plans to upsize it to buy about $15 billion. So investors, you guys, rushing into this one.
All right, you got the gainers, Carol. I got the decliners. If we look at the bottom of the S&P 500 in terms of weights on it today, Tesla and Amazon were the biggest. Let's start with Tesla. Shares finished the day down by 2%. Shares moved lower after we saw Democratic senators led by Richard Blumenthal and Elizabeth Warren call on the FTC to conduct an oversight and enforcement of Twitter's consent decree. Of course, Tesla CEO Elon Musk's Twitter deal has been a drag on the company's stock. And then keep an eye on shares of Amazon as well, down 2.3%. This was one of my decliners yesterday, down another 2% today after the company began its largest round of layoffs in its history this week, down 20% just since October and nearly 50% since its highs of last July. And then NVIDIA shares starting out higher today, but finishing down by 1.5%. The company did report third quarter revenue that was better than expected, though the company's outlook did miss some estimates. Analysts still broadly positive on the company, but a declining day for NVIDIA.
Let's take a quick look at the yield space because, of course, a lot of those comments that we got out of Bullard as well as some of the other Fed members really drove that sell-off in Treasuries today. At one point on the day, we were down more than 10 basis points pretty much across the board. Most of the activity, though, was in the shorter end of that curve. A two-year yield right around 4.4457. That's up about 9 basis points here on the day. The 10-year still firmly under 4%, but that also did move higher. And we did see a deeper inversion on that 210s curve down below negative 70 at one point here on the day. I do want to go back to some earnings here. And Carol, you left out one sort of key mover today, and that was, of course, Macy's. Interesting moves in some of the retailers. Now we're getting earnings out of Ross stores here. They look pretty good. Comp sales were actually down, but 3%. That sounds bad, but the street was looking for a decline of 8% here. So basically not as bad as expected. 3Q operating margins were better than expected at 9.8% versus a street estimate of 8.8% here. And here's your guidance here for the fourth quarter. They're looking for EPS of $1.13 to $1.26. The street on average was looking for $1.16. And the company now saying that 4Q comp sales will be flat to down 2%.
All right, so let's get to also another one reporting. We're talking about Applied Materials. This is a semiconductor capital equipment company. Well, this company also with some beats here and talking about the outlook. Fourth quarter adjusted EPS, big beat, $2.03 a share. The street was looking for $1.68. Fourth quarter net sales, $6.75 billion. Also outperformance there. The estimate on the street was $6.38 billion. And as for the outlook, first quarter net sales about $6.3 to $7.1 billion. Way outperformance because the street estimate right now is $6.34 billion. Stock is up about 2%. But, you know, you guys, the stocks, the semiconductor area, we've had a lot of bad news and we've seen a lot of pressure on this sector. And that explains why there's some upbeat reaction here in the after hours when it comes to investors, pushing AMAT up about 2.4% because these are some better than expected numbers.
Yeah, and building on the gains that we saw in trading today, SMH, the ETF that tracks semiconductor stocks, closing up 0.8%. For now, it looks like we might see those gains continue. Romaine, I just want to go back to Ross Stores for a moment because I guess it's not that surprising to see it do well. I mean, Ross is perfectly positioned for this kind of economy where the consumers might be trading down or looking for a deal.
Yeah, well, that's why I brought up Macy's, because, I mean, when we looked at their earnings and how well they did today, those shares up something like 14%. It was the idea that folks were sort of buying into their higher-end brands, so the Bloomingdale's and the Blue Mercury, not necessarily at Macy's itself. When we were speaking with John Edwards, a Bloomberg editor here, who basically talked about that's really the dichotomy now that we're going to see when it comes to consumer spending. The really high-end folks are going to do well, and some of the folks at the lower end of the spectrum are going to do well, and maybe Ross Stores, I guess you would fit into that lower end.
If you're going to spend money, you want to spend it on a big brand, a brand that's worthy of your dollars, and if not, you want to get a great deal.
If you're shopping for me, definitely Bloomingdale's over Ross.
What about chips? Is there an okay segue to go back to AMAT? Because I want to talk about some of the comments about the economy that we're seeing in the press release here.
No, this is important.
Yeah, Gary Dickerson, the president and CEO of the company, this is what sticks out to me. He says, quote, though we are seeing a slowing the rate of spending growth in the near term amid geopolitical and macroeconomic challenges, we are making the strategic investments to win the major technology inflections that will enable Applied to outgrow the semiconductor market. So he's going to say that they can overperform the market by making these strategic investments.
Yeah, it's something we talk about all the time, right? These geopolitical and macroeconomic challenges. So talking about it in the near term, some concerns about that. Though AMAT still up about 2.2% here in the after hours. Where should we go, guys?
I don't know, Carol. I mean, aren't you the ringleader here?
We should go to Ross.
What happens?
I keep thinking about Bath and Body Works, just outperformance today. Like some of these retail names that get it right.
It's because of the frosted coconut snowball hand soap or
is this seasonal?
gingerbread bakery.
Is it seasonal at all?
It's the fizzy bath balls that I know Romaine is buying, right?
No, well, first of all, I should just point out our house is full of candles for some reason, not because of me.
Is that seasonal?
Yeah,
or is that
I mean, I won't say why, but you know. Anyway, and it's not any coconut, fluff ball,
frosted coconut
snowball, whatever. It's like it was like regular flavors or whatever you call them. So.
Regular flavors like vanilla icicles.
Yeah. In all seriousness, though, I mean, we talk about sort of the trajectory of consumer spending, particularly during the holiday season, that traditionally has always been the meat of how these companies make their money, right? This is sort of when it's Black Friday, because that's when these companies typically would go into the black in terms of profitability. Is that going to be the case?
Well, and this is, I think, going to be very key during this holiday season. Can consumers continue to spend through it? How are they spending? Are they, kind of adding on to charge cards, which could be problematic if we start to see some kind of a recession or job slowdown in the new year? So it is going to be very important.
And just real quickly to squeeze this in, Farfetch shares down about 15% in after-hours trading. And a lot of what they sell is definitely more of those designers, those high-end brands here. So I'm curious to see as to why they're sort of missing on some of their revenue targets, while, say, a Bloomingdale's does well, a Ross Stores at the lower end does well. Where does like a Farfetch and those types of companies
Well,
fit
go
in?
back to Neil Kashkari, right? There's mixed signals like within the market, or I don't know. It's kind of hard to make sense of it.
Then it comes down to your management and inventory selection and making sure you can manage that correctly.
Hello, Target, right?
Yeah, sure. You're all getting candles for Christmas, by the way.
Thank you.
We're going to do a shopping tour, and we're going to have some fun at Bed. No, I keep saying Bed Bath & Beyond. They're all so similar.
You remember when they had that Kentucky Fried Chicken candle that sold out immediately?
We got to go. We're going to get yelled at really soon. All right, guys, that's a wrap. Our cross-platform coverage, radio, TV, YouTube, Bloomberg Quick Take. We do it all, counting you down to the close on this Thursday. We'll see you again, same time, same place tomorrow.